Cyprus is in urgent need of money from the Euro Rescue Fund, but the troika responsible for the bailout is split over how it should be structured. Euro leaders have now postponed deciding upon an international bailout for Cyprus until March. Joining me on the line is Fiona Mullen, Director at Sapienta Economics Ltd. Hello, Fiona. There seems to be considerable opposition against Cyprus' request for billions in aid from the European Bailout Fund. Do you think European counterparts will approve the funds?
I think that in the end they will approve the bailouts. It might take a little bit longer than we expected, but the reason I think they will is because there's still not really an appetite at EU level to let a fellow Eurozone country fail. But I think it could take until April or May because of the resistance from the German opposition, which, as you may be aware, it's been raising a lot of questions about money laundering in Cyprus, even though, as it happens, Cyprus is actually way ahead of Germany when it comes to implementing anti-money laundering laws. But because Cyprus does a lot of business with Russia, and there's a perception, I would say even a somewhat racist perception in Germany that everything that comes out of Russia must be bad, there's obviously been quite some questions about whether or not Cyprus is, behaving itself, as it were. So I think the bailout money will come, but only with a significant gesture, not only from Cyprus, but I think also from Russia. Russia is now being asked to contribute funds to the part of the IMF bailout, and I think Cyprus will find that it has to introduce some laws that it probably would have rather avoided, maybe on bank secrecy, which is you can lift it under certain circumstances, but maybe it's still a bit restrictive, or maybe on this financial transaction tax, which Cyprus is opposing, but I think a lot of EU member states want to introduce.
The aid would take Cyprus's national debt to well over 120% of the GDP. This is seen as a critical limit where countries can no longer finance themselves. Don't you think Cyprus needs a debt haircut like Greece?
No, for a couple of reasons. Really, the only way to make Cyprus debt sustainable is to extend the maturities. In other words, to give Cyprus longer to pay the money back. Especially because Cyprus has got natural gas money coming, but it's not coming anytime soon. It will be significant when it does come. It could be $1.5 billion a year, but it's maybe as far as 15 years away. So the are two problems with the debt haircut. One is that out of the $15.5 billion in debt at the moment, you can only really cut about just around $2 billion of that, because the rest is either domestic debt held by the banks that actually are in trouble, so if you cut their debt, you create a new capital requirement, or it's what's called senior debt, so it's held by people like the European Investment Bank. So there's very little debt you could actually cut, so it wouldn't actually bring it below 120% of GDP, at least according to my calculations. Privatization might help a bit, but again, it won't be quite enough to bring it below 120. So I think really maturity until the gas money comes is the only way.
What are the main issues facing Cyprus's economy now?
The really big problem at the moment is uncertainty. I mean, we've known since March last year that Cyprus needed a bailout. It took the government 3 months to apply for a bailout. We still haven't got the bailout money, and this is really, really damaging confidence, and it's, I think, probably also contributed to the very rapid increase in unemployment that we've seen. We've now got 14% unemployment, where Cyprus used to have unemployment below 4% for decades. So really uncertainty, and until this deal is signed and the money comes, that's a very big short-term problem.
And what are your long-term projections for Cyprus' economy?
I think I'm moderately optimistic for the long term, and really because Cyprus is so small, it means that things can go from good to bad very quickly. It doesn't take much for things to go from good to bad, but the reverse is also true. So it doesn't take a lot for things to go from bad to good, and you can see that in the fact that it looks like the government has already cut the primary deficit, and that's the budget deficit excluding interest payments, looks like it's already cut that in half. And once you get that into surplus, you can start paying back your debt quite quickly. So that's good news. And also, it is a small island economy. The Cypriots are sort of pretty resilient. So I think in the longer term, if they sort their budget out pretty fast, and because we've got the gas money coming in, it will come in eventually. As I say, it might not be for 15 years, but that will improve the prospects for Cyprus. But what it needs is a little bit of mercy from the German politicians in the meantime.
Thanks for joining me, Fiona. That's all for now. Here at Dukascopy TV, we'll be keeping you up to date with the latest financial news and updates. For now, though, goodbye.